Good morning, trading world. It is March 28th, 2022, 7:25 a.m. And this is my pre-market outlook and technical analysis for day trading the SPY. The title for today's outlook: Now is not the time to get comfortable. As markets continue to rally, how long can the bond market stay above its Maginot line and walk the fine line of staying above 146, 145 and staying below 155? Bonds put us into a no-win situation. No matter what they do, the market can get screwed. Bonds continue to sell off, it will tear the tech sector apart, taking down the market in the process. However, following the analogy that I use as the market being a runner, and runners can't run forever, the bonds will be due a bounce or consolidation at the least. So if we get a bounce, this could interrupt the run of the financials, also putting a drag on the market. Now, on top of that, with the inflation roaring and the Fed dragging behind on dealing with inflation, I said it before, bond traders will do what the Fed is scared to do, won't do, or just too slow to do, and that is raise rates to deal with the inflation through the bond trade naturally. So again, either way, the market is going to get screwed, whether bonds continue to sell off or whether bonds rally. And we have this kind of fine little small area where things could be content, but for only a little while, trading in a certain range. So, I guess that puts us to the key levels for today. Let me bring those up. All right, here we go with the key levels of the day, starting on the resistance side. We have the Jack resistance at the 452 to 453 level. Then we have the Queen resistance at 454 to the 455 area. And then King resistance at the 456 to 460 area. On the support side, we have Jack support at 451 to the 450 area. Queen support we have at 449 to the 448 area. And then King support we have at 447 all the way down to the 444 area. The main thesis for today is bullish, closing above the 452.69 with a projected high or target of 453 to 457. The alternate thesis is bearish, closing below the 452.69 with a projected low target of 448 to 444. The time frame in control is now the hourly, as the daily is now in overbought territory. The time frame control is tricky right now, as the weekly is the primary chart in control, but with smaller time frames having to run their laps first, you get this weird dichotomy where intraday may start the day in control, but at some point later in the day, it reverts back to the larger time frame, which is the weekly right now. The current channel we're in is by a hair. We're still in the 425 all the way up to 453, with the minor channel being 443 to 453. Okay, had to pause the video for a second. to take care of something, but you see if I can pick back up where I left off from. I think I was at the current channel. The current channel that we're in, the major channel is 425 up to 453, with the minor channel being 443 up to 453. And the next minor channel above is going to be 453 all the way up to 463. That brings us up to the scenarios of the day. Give me just a moment while I bring those up. Alright, here we go with the first scenario, which is going to be the expansive range day structure. We could look to set a decision area upper boundary around the jack or queen resistance area before chopping lower and then pushing boundaries higher. There are going to be a lot of similarities toward the trend day structure today, with the only difference being crossing back below and closing below the previous close here on the expansive range day. So let's get to scenario number 2. All right. The second scenario is our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area and find midday chop around either the queen or king resistance area before spending the same amount of time or same energy we use going up to come back down the second half of the day. Also be aware of the vice versa scenario on the rounded reversal day, which could look something like this. And the more and more I look at things this morning, if at the 453 area, if we don't see a whole lot of resistance, if we break through that 453 area with no trouble going into 454, we could really flip, and we're close to flipping. Right now, this morning, I had trouble deciding whether the trend day structure and the rounded reverse structure, which one would be ahead, because it's so close right now. And the more and more I look at it, the trend day up structure is coming more and more into play as we get closer to the opening. But this is scenario 2 right now. Maybe not for long as we get closer to the open. And our last scenario may jump ahead of everything here as we get closer to the open. Let me bring up the last scenario. All right, the last scenario we have is our trend day up structure, which means we open gap up. Represented, the blue line represents the previous close, which means we open gap up from that previous close, and we start off the cash open with a fade back toward the previous close, and then we find support on or before that line. And from there, we begin our uptrend for the morning, which is usually the strongest trend of the day. We find our midday chop either around our queen or king resistance area. And the second half of the day, being that we could revert back to the weekly, we could see things play out a little differently at the end of the day. There's probably more of a probability of continuing higher going into the end of the day or going into the close, because we're reverting back to the weekly time frame, which is definitely still within its bounce parameters. So we could see that continue up. So those are the scenarios for the day. As always, please continue to understand and know your risk, because that is the most important thing that keeps you in the game as a trader. Understanding your risks and protecting your capital. With that being said, as always, wishing you a positive trading day. Hope this helps. Have a great day.